Good morning, happy Monday. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asian stocks hit a record ahead of the Fed's long-awaited rate decision this week. The US president keeping up the pressure, calling for a big cut. Trade talks between the US and China enter a second day in Madrid. This is economic activity in China slows more than expected with a sharp slump in investment. Plus, the UK announcing a nuclear deal with the US ahead of Donald Trump's state visit this week. Prime Minister Keir Starmer seeking to put his domestic challenges aside. So after a week of gains for European stocks, looking to build on that again, with European futures pointing higher by 0.3%. Of course, it is a big week for the central banks with that Fed decision on Wednesday. The Bank of England also expected to come through with their decision, expected to remain on hold for the BOE. The BOJ also in focus as well this week. FTSE 100 futures going a little softer by 0.1%. S&P futures, after the gains that have come through, currently pointing to an upside of about 0.1%. So you're still near those record levels for the S&P 500. Nasdaq 100 futures looking to add 19 points. Let's flip the board and have a look cross-asset. Then Treasury's not trading today. Japan is on a holiday. Treasuries will be trading later, but not in the Asian session. Euro-dollar at 117. Brent trading at $67 a barrel. A little higher on oil prices in the session, up 0.5%, despite the weaker China data that's come through on the economy there. Gold also gaining modestly at 3,644, so still near those record highs for the yellow metal, and Bitcoin at 116,000, up 0.2%. We know Bitcoin as well is sensitive to expectations around the Fed. Let's get the check on the Asian market, where we've seen the strength, particularly in domestic stocks over in China. Weak data, but expectations are more stimulus, with a focus on Asian equities. Winnie Su. Winnie, what are you looking at?
Yeah, morning, Tom. Finally, we've made that record high levels in Asia as well, and it's really following that everything rally across the globe ahead of the Federal Reserve to cut rates this week, and it's also the expectation for the Fed to continue to ease in the coming few meetings. But take a look, for example, we have the Bank of Japan policy decision also coming this week. However, Japan is actually on holiday today. When you look at South Korea's Kospi, it's up today, boosted by the government's plan to scrap its capital gains tax plan. So that is really also supporting the sentiment in the South Korean market. And when you look at mainland China, you mentioned just now that, yes, we had a set of weak economic data, but stocks are actually still strong. Now we take a look closer at the breakdown of that economic data. Actually, weakness across the board, retail sales and the factory numbers, everything kind of missed consensus here. But what it's telling us is that the overall fundamentals remain quite weak, and that there is going to be further downside that we're going to be expecting for the third quarter GDP, and that the government has to come up with further and stronger policy support in order to hit that 5% growth target that they have set for the year. And hence, we're also seeing that CGB yields going lower because of the expectation for the central bank to ease further. Now, when we look at the individual stocks, the highlight here is CATL, the world's biggest EV battery maker, and it's up about 10% in Hong Kong, in China, after JP Morgan raised its ratings to overweight, citing the prospect of further earnings upside, and also after the government came up with the plan to boost the energy storage industry in the country. So it's really lifting not just that stock, but the overall EV sector that we're seeing in China. And hence, yes, we have a broad, weak economic data, but Chinese market is right now brushing off that weakness and focusing on the strength of these stocks.
OK, Bloomberg's Asia Equities reporter Winnie Su, thank you very much indeed for the update there. Meanwhile, on the trade front, US and Chinese delegations set to resume talks in Madrid later today after a first day of meetings covered issues including trade and the fate of TikTok. President Trump saying the talks are, quote, going fine, but that TikTok's fate will be determined by Beijing's actions.
They're negotiating TikTok right now. We may let it die, or we may, I don't know. depends up to China. It doesn't matter too much. I'd like to do it for the kids. They like it. I mean, selfishly speaking, I did very well on TikTok, and I got the youth vote.
OK, let's bring in our chief North Asia correspondent, Stephen Engel, in Hong Kong, who's been following these talks for us. Steve, what do we know about the progress that's been made so far in this latest round of conversations between the two sides?
Well, obviously, the trade issues are probably paramount. They're in the middle of a 90-day pause, if you will, that expires November 10th. And also, of course, there are some national security issues that were discussed between the two delegations in Madrid. Nearly 6 hours of talks. And you rightfully said they're going to continue this morning in Europe, Monday morning. But what was interesting is sort of pushing to the top of that agenda is the TikTok issue, which is still unresolved. And there's a deadline set by the White House of this week to try and find a buyer and find a U.S. buyer for the U.S. operations. Otherwise, it could be shut down. Or, again, we could get another delay. We simply don't know. You just heard Donald Trump saying we might let it die. It's up to Beijing. So we simply don't know what Beijing is going to come to the table and offer or even listen to various offers, because the rumblings we've heard out of Beijing is they don't necessarily want the data and this business to go into the hands of the United States at a national security time of heightened scrutiny, obviously. So we'll have to wait and see if indeed they can find a so-called deliverable on TikTok ahead of what probably is also going to be a lot of groundwork for a potential meeting between Donald Trump and Xi Jinping, possibly by the end of October when he comes out to Asia for APEC and possibly also the ASEAN summit.
OK, so possibly that leaders' summit as well, part of the conversations. And, Steve, this coming at a time when China, interestingly, announced these investigations into at least parts of the U.S. semiconductor industry. What was the rationale behind that move from the Chinese side?
Well, keep in mind as well, this came out Saturday from the Ministry of Commerce, so MOFCOM announcing two investigations, an anti-dumping investigation into American-made analog IC chips. They're not the cutting-edge chips, but they are in everything, from smartphones to electric vehicles to medical imaging devices and the like. So this one would impact companies like Texas Instrument, Analog Devices, and the like. So we'll have to watch this space and see how this investigation goes forward. The other one is probably a more broad investigation, anti-discrimination probe launched into American policy in limiting Chinese domestic chip makers through those export controls and various other measures. Keep in mind as well, it came essentially a day after the U.S. added 23 Chinese companies to its so-called entities list. A couple of big-name chip companies, Chinese chip companies, were added, including Shanghai Fudong, and a couple of others. So we'll have to watch this space as well. So there's no doubt China has been upset by the various steps the U.S. has made on the chip space, limiting China's ability to purchase.
OK, and a reminder of that in the last 48 hours or so. As you say, Bloomberg's chief North Asia correspondent Stephen Engel with that important update as we continue to watch the talks, of course, between the US and China in Madrid today. Steve, thank you. Meanwhile, the US and Britain will sign an agreement to make it quicker for companies in both countries to build nuclear power. That's when President Donald Trump visits this week, according to the UK government. The nuclear partnership is one of several economic deals that Prime Minister Keir Starmer intends to announce in order to, hopefully, he would hope, stop Mr Trump's visit becoming a bit of a diplomatic challenge. Bloomberg's Ros Matheson is here for the details. Ros, it's going to be a big week for the Prime Minister, arguably more important than for President Trump, who's coming with a number of CEOs. Let's start with the nuclear deal before maybe we get onto domestic politics. What do we know about this nuclear deal and some of the other deals that may come through from Wednesday through the rest of this week?
Well, that's right. So they're highlighting a whole lot of different kinds of business deals they hope to get done this week. The nuclear deal is part of that, and that is to use each other's safety assessments to essentially speed up licensing for nuclear plants and to allow cross-investment from their companies in all of that. And also we've got a lot of CEOs, as you said, coming with Donald Trump. There's going to be a bit of a fireside chat with these CEOs later this week involving both Keir Starmer and Donald Trump. But we do expect some announcements around, again, data centres, which is going to be Sam Altman from OpenAI and, of course, Jensen Huang from NVIDIA announcing potentially quite sizable investments in data centres in the UK in conjunction with UK companies. And, of course, Keir Starmer wants to set up these AI areas where you get fast-track approvals, you get electricity guaranteed to come in. So that would be a plus for him. But realistically dwarfed really by the numbers that these companies are spending in terms of data centres in the Middle East and elsewhere. So interesting investment for the UK, but not incredibly large, you would say, in the scheme of things. And there could be, of course, underlying all of this, the conversation around trade still, because there's lots of bits of the UK-US trade framework that are not entirely set, and that includes around steel and whiskey.
OK, and you would have thought that the Prime Minister's team will hope that the headlines will focus on trade deals at the end of this week rather than the pressure that is on the Prime Minister right now. Just talk to us about how the domestic politics, the pressure on this leadership here in the UK ties in to the visit by President Trump.
Well, it's coming obviously at quite an awkward time for Keir Starmer. It's all very carefully choreographed, you'd have to say. So what you have is a lot of time with the royal family for Donald Trump, because he does like a royal. So you have a lot of time with that, well away from the potential from protesters. Then you have the meeting moved to the rural residents, excuse me, for the Prime Minister. Again, away largely from the prying eyes of protesters. So maybe you deal with that. However, the UK press is going to be there, and they will continue to ask questions of Keir Starmer around the events of recent weeks, both, of course, around his former Deputy Prime Minister, Angela Rayner, because that's still going on, plus, of course, the most recent events around the investigation that we did into Peter Mandelson and his subsequent resignation. And so all of that's going to follow Keir Starmer through this week. Questions around the management of his government and certainly his inner circle coming into a very tricky time for the government, heading into, of course, budgets, and they've got to look at how they're going to find money for all their promises at a time that, fiscally they're very, very squeezed. So a lot of questions around that. And, of course, you just don't know what Donald Trump's going to say in the minute. That's always the unknown in these things. A joint press conference standing there next to Donald Trump. Does Donald Trump decide to comment on domestic UK politics? OK, let's see if the UK Prime Minister can get through this week unscathed and maybe with a lift on the back of some trade deals, or, again, facing questions on some of the domestic challenges. Ros Madsen, thank you very much indeed for that update as we look ahead, of course, to that presidential visit, that state visit by President Trump to the UK starting on Wednesday. Meanwhile, markets gearing up, of course, for a series of Fed cuts, beginning with what is expected to be a surefire quarter-point cut on Wednesday. The US central bank has been under intense pressure, of course, from President Trump, who's in the process of choosing the next Fed chair.
I have three people that I like a lot. Any one of them would do a good job.
Mr. President, one more on Venezuela.
But I think you have a big cut, because I don't think he can help but cutting. It's perfect for cutting. And the thing that he's hurting most is housing for people. But because we're doing well in everything. Energy's way down. Groceries are down. Everything, almost everything is way down. But housing, because of the Fed, is not what it should be.
OK, let's bring in Bloomberg's Valerie Titel for more on what to expect from the Fed this week. Val, what are you going to be watching for? Is it the language, the forecasts, or the decision itself?
I mean, all of it is going to be on the table. There's still speculation that the Fed could go larger than 25 basis points, maybe match what Trump is wanting for with an extra big 50 basis point cut. But their forecasts are also going to be instrumental for just how aggressive this restarting of their easing policy is going to be. The market is currently pricing in, Tom, 150 basis points of easing between now and year end next year. And Morgan Stanley out late yesterday changing their call on the Fed. They now see 4 consecutive 25 basis point rate reduction from the Federal Reserve, saying that they're going to more eagerly want to get towards neutral. And they're going to back up this Wednesday's cut with a series of 3 more. We also had some more dovish tilt from the likes of Deutsche Bank economists as well. But the other big question, Tom, is just who is going to be at this Fed Fed meeting, which begins tomorrow morning. We still have questions out there about Lisa Cook. Lawyers from both sides presented their arguments for her case over the weekend. Perhaps this appeals court could weigh in on her being allowed to stay on as governor while this lawsuit is making its way through the courts. We also have Stephen Meyron's Senate confirmation vote tabled for later this evening in the Senate, likely to be a pass. So it'll be very interesting to see where Stephen Meyron fits on the summary of economic projections. Just how far out of consensus will his dot on that dot plot be, perhaps suggesting that there is more of a dovish shift in the Federal Reserve to come as the musical chairs does continue. But it's not just the Fed that is deciding policy rates this week. We have 4 of the G7 deciding monetary policy. The Bank of Canada actually begins. They are expected to cut on Wednesday right before the Fed. We also have the Bank of England and the Bank of Japan expected to be on hold this week, with the next cut not priced in for these 2 central banks until early next year.
OK, Bloomberg's Valerie Titel, thank you very much indeed. With a look ahead to the central bank action, with the focus squarely, of course, on the Fed. Val, thank you. Here's what else to think about then through this week. On Tuesday, President Trump will arrive in the UK, formally starting then the state visit on Wednesday with the King. That will dominate the Wednesday story for President Trump. And then he moves to Thursday and a meeting with the Prime Minister Keir Starmer. Meanwhile, on Wednesday, we do, of course, get the Fed decision that Valerie Titel has just unpacked for us. On Thursday, it's the Bank of England's rate decision, fully expected to keep rates on hold at the Central Bank of the UK. And you can get a roundup of the stories you need to know, of course, to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB, Day Go on the terminal. Coming up to geopolitics, US Secretary of State Marco Rubio plans to discuss Israel's strike against Hamas officials in Qatar when he meets with this Israeli Prime Minister Benjamin Netanyahu. He has been meeting with him over the weekend. We're going to have the latest on that visit next. Plus, later in the programme, we will be joined by Xiaolin Chen from Kraneshares as those trade talks between the US and China enter day 2, and we get a reminder of the relative economic fragility of the world's second largest economy. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. US Secretary of State Marco Rubio is in Israel just days, of course, after an unprecedented Israeli airstrike targeting Hamas officials in Qatar. Despite the strike, Israeli Prime Minister Benjamin Netanyahu says the ties with the US have, quote, never been stronger.
I think his visit here is a testament to the durability, the strength of the Israeli-American alliance. It's as strong and as durable as the stones of the Western Wall that we just touched under President Trump and Secretary Rubio and their entire team. This alliance has never been stronger.
For more, let's bring in Horizons Middle East and Africa anchor Jemana Pasechi. So, of course, the Prime Minister of Israel, Jemana, trying to make the case that the relationship, that the partnership between Israel and the US is as strong as ever, that it has not been dented by this attack, of course, on Doha. How real is that? How much pressure is Israel likely to come under from the US Secretary of State and the Prime Minister in this meeting?
Very good question, Tom. But this is also a show of support from the United States. The fact that the Secretary of State, Marco Rubio, did actually fly to Israel. He's there for a 2-day trip. You were just looking at footage there of himself alongside the Israeli Prime Minister doing a tour of the Western Wall. Today, they're going to be giving a press conference at about 1:55 p.m. local time. Before he went on the trip, Marco Rubio did say that his point of the trip was to determine exactly what Israel's endgame is with Gaza, especially in light of the attack on Doha last week, which is widely seen as an obstacle to further mediation talks between Israel and indirect discussions, I should say, between Israel and those Hamas officials that were being mediated by Qatar. Now, it should also be said that the Qatar PM himself was in D.C. last week. He also met with the Secretary of State, Marco Rubio. He had a dinner with President Trump alongside Steve Witkoff. There was no official readout of that dinner, but yesterday President Trump was asked about the status of the relationship with Qatar, and he did say Qatar is a great ally, and then, quote, And this is interesting. People talk of it so badly, and they shouldn't be. So this is direct verbatim from President Trump yesterday vis-a-vis the interpretation, the impression that what he says is the rest of the world has of Qatar. Now, I think this is diplomacy work at its finest. The U.S. is really trying to paper over the cracks that emerged in their relationship last week. There was visible anger from Qatar and the fact that those security guarantees that Qatar pay a lot of money for were not actually triggered. But the language over the past couple of days has certainly moved towards more diplomatic type languages on both sides, reaffirming that they're great allies to one another. And Qatar have actually reaffirmed that they're willing to continue with those mediation talks. There is an Arab Muslim state summit taking place right now. In the readout, all of these states pledged to support Qatar, and Qatar themselves, the Prime Minister said that they are willing to push forward with those diplomatic efforts because they are seen to be integral to the process of eventually getting a resolve to this conflict.
OK, Bloomberg's Jemima Pasecci with that update for us, of course, anchor of Bloomberg Horizons Middle East, watching the conversations between the US Secretary of State and the Israeli Prime Minister, of course, and those meetings continue later today. Coming up, the Chinese battery maker CATL hitting an all-time high. We'll discuss the impact of its latest ultra-fast charging EV batteries. That is next. This is Bloomberg. Shares in Chinese battery maker CATL hitting an all-time high on expectations for stronger demand for its energy storage system business and an upgrade by JP Morgan. It also comes after a potentially groundbreaking announcement by CATL last week. Let's get more from Andy Leach, analyst of BloombergNEF's battery tech team. So, Andy, thanks for joining us. What was the latest in terms of this update on the tech coming through from CATL?
So last week at the Munich Auto Show, CATL announced two different variants of their Shenzhen Pro battery. One is the ultra-fast charging, where they can add almost 500 kilometers of range in 10 minutes. And one is the long-range battery, where they have almost just over 750 kilometers of range in their battery. What's most interesting about this is that they're announcing them in Europe for the European market, just only a few months after they raised $4.5 billion on the Hong Kong Stock Exchange in a listing, partly due to trying to raise money to build their factory, the 100 gigawatt-hour factory in Hungary.
So we could be getting, you said 750 kilometres, potentially.
That's correct.
What does this tell us about next-gen battery technology and where this takes us?
So I think one of the most important things is that they're targeting these batteries for the European market. So some of these numbers are not sort of completely groundbreaking with respect to metrics that have been announced by competitors. So BYD, for example, announced a slightly faster charging battery earlier in the year. However, these announcements, as I say, are in Europe for the European market. Most of these other announcements are coming to market first in China, where both BYD and CATL are based.
Where does this leave the competition between Europe and China?
So with respect to sort of next generation technologies and like these, the majority of manufacturing capacity is still in China. There's still going to be a significant amount of imports coming into the region. However, as I say, these announcements by the world's largest battery manufacturer, CATL, being in Europe for the European market, and in their press release, they specifically mentioned how this would be really important, the fast charging battery in particular for the European leasing market. You can see that they're really thinking with respect to their product roadmap about the European customers. So it's a really big step forward for both European customers and European OEMs. OK, really interesting in terms of the developments around next-gen EV battery design and innovation, what it could mean for the European market. Andy, thank you very much indeed for the analysis. Andy Leach, of course, analyst with BloombergNEF's battery tech team. You get more of their analysis, of course, on the Bloomberg terminal. Coming up, trade talks between the US and China, meanwhile, entering their second day. We'll discuss what to expect with Xiaolin Chen from Kraneshares. That is next. This is Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Monday. These are the stories that set your agenda. Asian stocks hitting a record ahead of the Fed's long-awaited rate decision this week. The US president keeping up the pressure, calling for a big cut from the Fed. Trade talks, meanwhile, between the US and China enter a second day in Madrid. This as economic activity in China slows more than expected with a sharp slump in investment. Plus, the UK announces a nuclear deal with the US ahead of Donald Trump's state visit this week. Prime Minister Keir Starmer seeking to put his domestic challenges to one side. Let's check in on the markets then. European futures on the front foot after a week of gains last week. Expectations, of course, from these markets that the Fed goes with at least 25 basis points for their first cut of the year on Wednesday. How do they guide beyond that, though? That seems to be the key question for these markets. In the UK, FTSE 100 futures a little softer by 0.1%. S&P futures looking to add 0.1%, as are Nasdaq 100 futures as well, up by 16 points so far in the session. Global stocks at or near those record highs. Let's flip the board and have a look cross asset then. The focus, of course, on what's happening in the currency space. France will be in focus as well, certainly when sovereign debt starts trading 8 a.m. UK time, or 7:30 a.m. UK time, in fact, with the sovereign debt of France in focus after that cut by Fitch. Euro dollar at 117, Brent at $67 a barrel, up 0.6%, and gold still near those record highs at $3,643 per troy ounce. Bitcoin as well, gaining up 0.5. We know the cryptocurrency is sensitive to expectations around the Fed as well. Let's get to France then. French 10-year bond futures drifting a little lower as traders reacting then to Fitch's ratings downgrade of the country following recent political turmoil. That is France's new Prime Minister, Sébastien Lecornu, dropped plans to cut 2 public holidays, but warned the government will need to find other ways to reduce its budget deficit. For more, let's bring in Jean Dalbas, economist at Bloomberg Economics, joining us out of Paris. Jean, should we be surprised then by bond futures drifting lower? It presumably wasn't too much of a surprise for investors that this downgrade came through from Fitch on Friday.
Well, we think that any market sell-off should be pretty much contained. First of all, because the spread is mostly driven by the political premium at the moment. Second, because, as you said, we think the cut was pretty much priced in by market participants. France is already trading like a BBB. Some big French corporates are trading below France. So it's mostly priced in our view. And third, because the macro background is holding pretty well, and that's something to bear in mind. The main risk, in our view, would be medium term if France's rating converges to what Italy's rating. That would be a big issue for France.
OK, so we're still watching that potential convergence between France and Italy. When it comes to the new Prime Minister, Monsieur Lecornu, then making some concessions, Jean, over the weekend, is that as far as it goes, or is there more that he needs to do? To what extent is that playing out domestically? Is he winning any backing at this point?
Well, I think that the Fitch downgrade will put enormous pressure on the government and its ability to negotiate with the centre-left, with the socialists. And we think it will need to make 2 main concessions. The first one will be on the size of the budget, of the fiscal plan, to water it down to 30 billion, for example. And the second one will be to strike a deal with the socialists. It will need to find some new form of taxation against ultra-rich citizens. So that would be the main issue. And it would be pretty tricky because the deadlines is pretty tight. It should find present a budget at Parliament in early October.
Jean Dalbas, economist at Bloomberg Economics. Thank you very much indeed for the context around the update, of course, out of France on the back of that downgrade from Fitch that came through, of course, when it comes to the sovereign debt of France. Now, some other stories making the news today, and to Germany, where the far-right Alternative for Germany party tripled support in municipal elections, tripled in the industrial state of North Rhine-Westphalia. The result intensifying pressure then on Chancellor Friedrich Merz's government to revive growth and push through those promised reforms. According to preliminary results, the anti-immigration AfD party increased its share of the vote by 9.4% to 14.5%, while Merz's Christian Democrats received 33%. And an anti-immigration march in London, organised by the far-right activist Tommy Robinson, drew more than 110,000 people on Saturday. Participants in the so-called Unite the Kingdom march chanted, "We want our country back," amongst other things. Billed as a demonstration in support of free speech, much of the rhetoric was aimed largely at the perils of migration. Even Elon Musk waded into the fray, beamed in by video. The tech billionaire told attendees to, quote, "either fight back or you die," quote. That from Elon Musk. The rally descending partly into chaos, with at least 26 police officers hurt in clashes and 25 people arrested. And New York Governor Kathy Hochul has endorsed Democratic nominee Zohran Mamdani for mayor of New York City. It's a key backing, of course, for the 33-year-old frontrunner whose candidacy hasn't yet been fully embraced by members of his own party. The decision is a blow to incumbent Mayor Eric Adams and former Governor Andrew Cuomo, both of whom are running against Mamdani in the general election on independent ballot lines. The governor of Utah has blamed social media companies for helping foment divisiveness that led to the killing of conservative activist Charlie Kirk. Kirk was shot dead while speaking at an event in Utah last week. 22-year-old Tyler Robinson is currently in custody, accused of his murder. Governor Spencer Cox didn't name specific companies, but said social media was worse than cancer.
I believe that social media has played a direct role in every single assassination and assassination attempt that we have seen over the last 5-6 years. There is no question in my mind that cancer probably isn't a strong enough word. What we have done, especially to our kids, it took us a decade to realize how evil these algorithms are.
OK, we're going to switch focus right now to the economy of China. Economic activity slowing more than expected across the board in August, adding to the likelihood that policymakers will roll out more stimulus. Industrial output and consumption had their worst month yet this year after a sharp slowdown in July, an underperformance that may heap more pressure on Chinese negotiators during their trade talks this week with US representatives. So, yes, the economic data could tie in to those trade conversations. Let's bring in Xiaolin Chen, then head of international at Kraneshares. Chen Xiaolin, good morning. Thank you for joining us. Let's start with the data, and then we can get to the trade story. What do you make of the economic weakness and whether or not it will prompt policymakers in Beijing to step up stimulus and support for that economy?
Good morning, Tom. Thank you for having me on your program. Clearly, the data came in this morning slightly below already low expectations for the month. Factoring the seasonalities of August tend to be a bit quieter. Some of the data, industry productions, retail sales, even fixed assets investments all came in slightly below the expectation for market expectations, but for a reason. For instance, the fixed assets investments, given China's ongoing effort to rebalance its economy to innovation, to technology, to AI, to all those sectors, to healthcare or healthcare tech, those will unavoidably, these numbers will continue to fall for some period of time. So that means reinvesting in real estate, reinvesting in projects, so on and so forth, would be delayed or reduced in projects numbers going forward. The other factor, which is just the monthly factor, which is the weather. And some of the locations in China has experienced quite a severe, flooding in the country, and then in Beijing and the neighboring cities also had to put some of the projects on hold because their preparations in the, the military parade happened early in September. All these put aside, this is 1 month's data. The policymaker in China definitely look at it. They are not shy. They have showed a record over the last couple of months of introducing and put into place of implementing pro-growth policies from monetary and physical. We do expect physical policy will pick up massively in the remaining months of this year.
OK, so you expect fiscal policy to pick up massively in the remaining months of this year. To what extent is that the greater catalyst for Chinese equities, or is it the AI momentum, or is it a combination of the two?
It's a combination of two, Tom. You nailed it. It's both policy and also the underlying economic or underlying sectoral rebalancing happening in China that attracted investors' flow this year. And if you look at the year-to-date basis or 1 year rolling, namely the China Internet funds attracted billions of inflows into some of the ETFs. We want to say these are really investors, one, rebalancing their underweights to this asset class. Secondly, being very selective to pick the sectors that will actually lead and drive this economy going forward. The pro-growth policy, monetary and physical, both has been in place for 2 years now. Obviously, market expects more aggressive policy. I think you already have the aggressive policy in place, and you already have the promises from the policymaker. They will continue to implement pro-growth policy.
From the trade talks that continue in Madrid between the US and China today, Xiaolin, what from with that market lens, what are you watching for from these discussions that could be salient for the equity markets?
Clearly, both sides has met. This is the fourth time in 4 months' time. Shows definitely a very constructive approach on both sides to want to make this work. I think Madrid meeting is important. Sounded like all the agenda announced by both sides. They have brought forward their Christmas wish list on both sides. So we know what they both sides wanted to achieve in these talks to make a final agreement, make a final deal. The most optimistic outcome would be they lay out the agreement, they lay out the items, how they want to struck a deal on both sides, and ready to be blessed or signed by President Trump and Xi Jinping. That's in preparation for potentially may meet this year. That will be the most optimistic outcome. The market does hope that. My expectation is this round of meeting in Madrid will definitely lay a very clear framework, because you do need it for the number one, number two of economic negotiating on such a big deal. You do need a framework to be in place, which they have been working on that, which is a great achievement. Second is get your item forward and let's agree a deal and get the deal to be struck in a clearly near future.
OK, we'll see if they can make that progress in those conversations today. Xiaolin Chen Xiaolin, thank you, Head of International at Kraneshares, with the expectation that the policymakers of Beijing will come through with, quote, massive stimulus as well in the next few months. Thank you for that context and analysis. Now, it's a busy week, of course, for central banks as well. The Federal Reserve is poised to resume cutting interest rates, of course, for the first time in 9 months as it grapples with that slowing labour market. We're also expecting rate decisions from the Bank of Canada, the Bank of England, and at the end of the week, the Bank of Japan. Let's bring in Paul Dobson then, our executive editor for Asia Markets, joining us now. Paul, as we think about expectations for the Fed, I mean, fully priced for 25 basis points, where is the market on 25 versus 50 as Trump keeps that pressure up on Jay Powell?
Good morning, Tom. I think 50 is still seen as very much an outlier bet within the market. I don't think any economists are predicting it. And while the market may be pricing slightly more than 25 basis points of cuts, that's, kind of people protecting against the possibility that the Fed could go further. It seems like it's not anywhere close to a base case. And the reason for that is that, when you listen to the policymakers, some of them have still been saying that they don't really see the need to cut. Some of them have been pretty moderate. It's enough to give the market confidence that we will see them beginning to lower interest rates this month, but it's not enough to give many people confidence that they might actually go for a more aggressive line. I think what will be interesting, though, is how much of a pace of cuts the market comes out of the meeting thinking is likely. What does the dot plot show us about are we going to get 3 cuts instead of 2 this year, 1 at each of the Fed meetings? Are we going to get another one in the first quarter of next year? At the moment, the market is pricing in 6 cuts through the end of next year, which is still quite an aggressive amount of easing to be priced in, given where the economic data is. Yes, we've seen a slowdown in the jobs data, but the inflation data is still sticky. And if you were going to cut 6 times, which is, if Trump is going to change the lineup of the Fed to put in more dovish policymakers, it's entirely possible, but it may not be entirely reasonable based on where the economy is right now. So that's the kind of trade-off that the markets are grappling with. I think 6 cuts priced in already to the front end of the bond yield curve means, there would have to be some dovish noises coming out of the Fed to price anything more than that in.
Paul, what are you and the team watching for when it comes to the other major central banks this week beyond the Fed then?
So I think BOJ is also interesting because, the Fed cutting should be weighing on the dollar, and the BOJ is supposed to be moving in the opposite direction, raising interest rates. Not likely to happen this meeting, but maybe there'll be the possibility that they do something before the end of the year. And if we get a little bit more of a hint of that from policymakers, then that will play out in the bonds market, where we've seen rising yields already, and maybe in the currency market as well with a stronger yen. So that's something to keep an eye on for sure. I think we also get the Bank of England, which is interesting, not so much for interest rates, but more about the pace of QT there. Maybe they will slow that down, and that will give the government a little bit more breathing room in the gilt market. That could be quite an interesting one to watch out for. And then over in Canada, it seems that they're more than likely to start off this kind of big round of central bank meetings with a cut to interest rates there, sort of getting ahead a little bit of the Fed, given weak labour market conditions in North America. So there's plenty of actions come, actually. It's looking like an exciting week as far as the central banks are concerned, and that may lead to some volatility in the bond market and in the FX space as well.
OK, great setup for us. Paul Dobson, ahead of that excitement, our executive editor, of course, for Asia markets. We appreciate it. Thank you, Paul. Now, Bloomberg has learned that Brookfield Asset Management is in talks to acquire the US landlord Yes Communities from Singapore's sovereign wealth fund, GIC. Sources say the entire portfolio could be valued at over $10 billion. Denver-based Yes is among the biggest operators of manufactured housing communities in the US. Coming up, Europe's window for IPOs opens with a host of deals in the pipeline. We're going to have the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, there has been a dearth, of course, of IPOs in Europe as companies put off listings while uncertainty around tariffs remained. But the window for IPOs opened this week with several major listings on the horizon. Let's get more from Pablo Mayo-Sequeiro, who is Bloomberg's Europe Equity Capital Markets reporter. Finally, we're seeing a defrosting, maybe, of the IPO pipeline. What are we looking at? How big is this window, then, Pablo, that we're potentially looking at when it comes to listings in Europe?
I think you could say that this is one of the fullest IPO pipelines we've seen in a while. So it's got the potential to be a pretty busy IPO season. We count around a dozen companies looking to go public before the end of the year. Of course, the IPO market is temperamental, so we'll see how many of those actually make it. But there's already 3 in the market, so we're off to a good start.
What is in the pipeline, and where is the regional, or where's the activity focused regionally?
So I think the pipeline is quite diverse, and it goes across Europe. But arguably the busiest exchanges are likely to be Stockholm and Frankfurt, Zurich, and potentially London with a little bit of luck. There's 3 IPOs in the market. In Zurich, we got Swiss Marketplace Group. In Sweden, there's a Scandinavian lender called Nova Bank trying to go public. And just this morning in Frankfurt, we have Otterbock, a maker of prosthetics that has decided to go public. So maybe more will join in the coming weeks.
Well, to that point, to what extent is this expected to have a kind of catalytic effect on companies looking? The market conditions have improved, of course. The equity market has gained pretty significantly in Europe, up double digits year to date. Does this clear the path now for a healthier IPO pipeline, or are there still risks and challenges?
I think a bit of both, to be fair. So we had, as you pointed out, a very slow IPO market for 3 years. In the first half of the year, it was supposed to be quite busy, but obviously tariffs got in the way. Right now, as you pointed out, equity prices are high, volatility has subsided somewhat, and there is a lot of supply for companies that want to go public. So now it's as good a time as any to do so. But of course, there could be a bout of volatility tomorrow. There could be an escalation in armed conflict. So depending on how this goes, I think it'll define how the start of 2026 might look like.
OK, Pablo, thank you very much indeed. Really important update in terms of what's happening with the capital markets of Europe and that IPO pipeline. Pablo Mayo Sakera, thank you. Bloomberg's Europe Equity Capital Markets reporter. Now to some of the stories making the news this Monday. Food inflation here in the UK expected to climb to 5.7% by December, driven by regulatory costs. That is according to the Food and Drink Federation, a group that represents the industry. This marks a big increase from its previous forecast of 4.8%. given back in March. The Federation is calling on the government to help reduce costs. Meanwhile, a new report by Rightmove finds that house prices in London fell for the first time in almost 2 years amid fears of a new tax raid on property. The value of homes put up for sale fell 0.1% in the 12 months to September to £370,000. And 257. There's speculation, of course, that Chancellor Rachel Reeves will look to the property market to help balance the books ahead of that crucial November the 26th budget. And HBO's Max, new medical show, the Pitt, took home the Emmy Award for Best Drama, while the studio on Apple TV Plus won for Best Comedy. Warner Brothers Discovery, which owns the HBO Max streaming platform, also saw Noah Weil win Best Actor in a Drama for his work on The Pitt. Overall, streaming platforms dominated the Emmys, the TV industry's highest honour, reflecting the continued shift from broadcast and cable to online viewing. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So we had a reminder of the softness in the Chinese economy today, particularly focused on retail sales, industrial production. It could tie into those trade talks that continue, of course, between the US and China in Madrid. Does it give the US a little bit more leverage? Well, the US data as well is also looking a little bit challenged. That will take us onto the Fed shortly. But our previous guest from Kraneshares, Chen Xiaolin, saying she now expects massive stimulus from the government of China to try and support that economy. And that is partly why shares have gained in the Chinese session, though the gains have come off a little bit. Let's flip the board and have a look at what to expect in terms of this state visit by President Trump to the UK later. It kicks off in full on Wednesday. Here's the tariff differentiation between the UK and some of the other trading partners of the US. We've come out of this fairly well here in the UK, and partly that's down to the personal relationship between the Prime Minister Keir Starmer, of course, and President Trump, but also arguably President's love of royalty, and that ties into why, of course, that visit, and particularly the pomp and ceremony around that royal visit, particularly on Wednesday, is going to be important. Arguably, that has been a factor that's kept tariffs relatively low in the UK versus some of our other competitors and peers. Let's flip the board and have a look at where things are standing when it comes to Fed pricing. It's now arguably beyond the decision on Wednesday and is looking ahead to what the guidance is when it comes to October and later in the year. So the white bar represents September, so fully priced 28 basis points. Then the blue bar is representing October. You've got about 16 basis points priced in. Then, of course, December, 25 basis points. So that has extended. Markets and traders now betting on more cuts. We'll see if there's any pushback to that narrative on Wednesday. Bloomberg subscribers, of course, can get these terminals on the terminal. Of course, these charts on the terminal. You just need to go to GTV Go. The opening trade, though, is up next. Stay with us. This is Bloomberg.